fast on that rally, to be honest. And I didn't buy for the squeeze. I didn't get involved in the buy side. I just sat on the sidelines and I waited for the next opportunity. Based on the next opportunity, I had a high price here, I had a low price here, so I'm already starting to think about an area, bearing in mind this price was very important to me because it was the pullback on this next bracket trade here. And we saw the buyers coming back in at this halfback here, so I was very, very aware of that. And then we basically just set up another position for another sell order at this price. Correct? Correct, correct, correct. What else is it at this price? $97.50. $97.50. That's a level that you'd have been thinking about before, wasn't it? That's a level that you've been contemplating in the past, isn't it? $97.50. You're looking at those ideas, you're thinking about some of these narratives in the background, and you're thinking to yourself, what is around that $97.50? And you come across some action that we did before. You're looking at the overall shape of this. We can go out from the 15-second chart up to a 5-minute chart, for example, and we look at the 5-minute chart and we go, wait a second, that 97.50 is a very, very, very interesting price, on the basis that it kind of takes the high swing, low swing narrative and it divides it by 2 into this phase here. So that takes us to a price area of around about 97.70s and around about that 97.50s, where the bullish order block turns into a seller's pending. Bullish order block turns into seller's pending, doesn't it? Because that's what we do. That's how we turn these things. Cappers and bullish order blocks, because there was a big bullish order block at this price here for that very fast money rally up there. So that obviously was a bullish order block if you're keeping your charts up to date. And a bullish order block, what do we do? How do we do this? Well, we simply go again on the other side of the line and we say seller's pending. Well, that seller's pending level is now known to you. It's known to you, isn't it? It's something you already have on your charts, or at least it's something you should have on your charts. So that when you come up into this area, you're in an area that you know is a seller's pending area, and you're aware of the fact that it's a seller's pending area because you've done the necessary work in the background. In addition, there was obviously a little seller's order block that came in here, which obviously is what captivated the action in the earlier stages here. So we've got this bearish order block from that price. And then when we obviously see that, we can now recognize the opportunity to get that short trade off 97.50s. We know where the low price is. Well, guess where the low price is? 95.50s. And you can already recognize that that break of those stops there, that's going to be a great opportunity for a walkaway. And that's what we did, a great opportunity for a walkaway. And that's what we did. $2,000 profit per contract. $2,000 profit per contract. And that little bit of sell-side business, guys. Crazy? No, we've made a fortune today in oil. If you've not made a fortune today in oil, guys, my God, you haven't left the car parking lot yet, have you? You've not left the parking lot yet. Because this has been crazy easy. Structures, levels, stories, narratives, they're all teeming in these areas, aren't they? They're teeming in these areas as opportunities to capture a little bit of this business here in the right place at the right time. Crazy. So you can see what happened. As I said, we had the measure. We tried selling it here. We failed miserably. We saw the drop off in volumes. We told you that earlier. The drop off in volumes and then the increase in volume at a measured move gave us a perfect excuse to then sell it again. We sold it again. We obviously were expecting to see a buy resistance here. It never happened. Got through that. And now we're obviously starting to think about target prices. And the target price is obviously very straightforward. If that's the low price at that stage and that's the high price at that stage, where's your target price? I wonder where the target price is. Why don't we just draw it in the charts and you'll see where the target price is. It's 95.30s. 95.30s. And then obviously into the 95.30s, that's it. We're just finishing up. Trade's finished. Big volume comes in. Big volume vanishes. And we just close off our position into that area. That is glorious, isn't it? It's absolutely glorious. Now, when we look at this as a process, as a process of business, Is there anybody who thinks that the commercial activity is anything but bearish off those high prices, yes or no? Commercial activity, guys, commodity risk line, anybody think it's bullish or bearish? Anybody got a feeling that we should be buying oil at higher prices? What do you think, guys? Come on, seriously? What? There's nobody that's going to tell me that that's bullish, correct? There's nobody stupid enough to tell me that that's bullish. So we get this great opportunity to get a bit of business done and work that sell side only opportunity. Top line sells. And when we see that as a relationship, we can see that that is absolutely fantastic. So when we see that as a relationship, there is no challenge. It is simply, let's get some short oil, which is why we've tried it several times, but we needed that extra lift to just stick it in the markets at that stage, right? We needed a little bit of a lift to stick the market price. And then when we look at the way that the spreads have worked, again, very, very bearish, again, absolutely crystal clear, very bearish spreads. When we look at the concept of the bonds trading oil, anybody think we should be buying oil, guys, this afternoon? Anybody think we should be buying oil or selling oil? What do you think? Buying oil or selling oil? Come on, look at it. What do you think, guys? Buying or selling oil? It's sell side only, isn't it? It's absolutely rock solid to be selling. So now you know why I was selling in here, because I thought it was a good deal. I actually genuinely thought this price was going to be a good price. I was miles wrong, correct? But I don't know that at the time. I don't take the arrows off just to make my buys and my sells look good. I leave them where they're on. They're on the charts and you see them. They're still on the charts from this morning. They're still on the charts in the afternoon, and they're still on the charts when we tweet them out. We don't take them off. If there's a buy there, there it is. That's where we bought it or sold it. So when we see this, the only time we'll ever take them off is when we're trying to show you a clean chart to start the whole process of analysis again. But no, we took a sell there and we never made any money. We didn't lose any money. We 10 ticks and a scratch. You can see why I was selling it. It's an absolute no-brainer sell, but it never worked. It never worked. So we had to just let it go through. We had to let it go through. And the distance that these types of things can go through will obviously surprise. It's not 5 ticks through a level, is it? It wasn't 5 ticks through a level. It was a full measure. And obviously that's dead easy to find out because we had the high price and the low price. And when we do that, we simply say, well, where's the guaranteed premium? Well, the first thing I do is try and calculate where my guaranteed premium is. When the value is this bearish, the one thing I absolutely definitely do is figure out where the guaranteed premium is going to be. Because if I get anywhere near that price, number one, I'll be kind of gobsmacked. And number two, I'll be assembling the troops, right? This is a full-on assault. Let's get ready to press here, guys. Let's get ready to press. All right? It's not just a sell. It's a big sell if we can get that price. Now, obviously, you can see that price didn't hang about that area for terribly long because everybody, I think, was doing exactly the same thing. Everybody was assembling the troops for a massive assault on this oil price. And obviously we went 97.50s to 95.50s. We made ourselves $2,000 per contract. It's just unbelievably easy to see it though, isn't it? But it's just about going through the processes, isn't it? It's just about going through the processes. And when we think about the process, what about inflation break-evens? Did anybody think inflation break-evens were bullish or bearish? Bearish, right? It's just bearish, 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 and a little bit of bearish. So we can see that it's just constant, the idea, the process, and you're saying, I don't get it. But look at the euro dollar. Was this bullish or bearish oil? Look at the euro dollar, bullish or bearish oil at the top edges. Bearish. In other words, it doesn't matter if we're looking at bonds, inflation break-evens, commodity risks, the dollar, or supply demand. Every single line was bearish. Now you know why. I'm kind of saying, if you didn't get this, if you didn't see this, if you didn't understand this. Now you know why I would be very upset and why I would be basically giving you the sack. Because there's not a chance you'd be working for me if you never got this trade. Not a chance in a billion years would you be working for me if you didn't get that top line sell, guys. So that's the sell you've got to get, and if you've missed that, you've got to try and find a way into it. It is an enormous opportunity to make some money, especially when we know that oil has the volatility to work. And then the pullback here is probably just as good. And the sell-off target price, absolutely golden. Perfect trade, perfect outcome, and an enormous, enormous profit. But look at all the trades. Since we've been talking about this, look at all the trades that we've done today. It's not one trade, is it? There's a lot of trades in there. What did we miss as a trade? The only thing we missed today as a trade was this leg higher here. That was the only thing we missed. We called the sell, we got the buy, we got the big rip, we got the sell, we got the sell, we got the sell, we got the sell, we got the squeeze buy, we got the sell, we got the buy, 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 we got a sell, we missed the buy, and then we got the sell, we got the sell. So when we understand that, we can understand the process. We can understand the process of how these trades have evolved and how they've worked and how you can see the scenarios unfolding on the screens. You can see the levels, you can see the measures, you can see the narratives. Everything lines up exactly as we teach. In fact, we did a classroom this morning on the S&P, remember? And we showed you the measured moves and all that kind of stuff. And my goodness, the S&P was, I even used the expression that the S&P almost felt like it was robotic this morning, because it was so in line with every single piece of information that we already had available on our screens. Now, if we go back to the bigger picture, on the oil markets, to go back through the whole day, you'll see that even across the whole day, you'll see that we had this big level here already marked because that was that imbalanced sellers pending area. We told you about it this morning. So we had the buy trades, then we had the cap buyers coming in at this price, and then we had the sell trades, and the sell trades were coming from a bearish order block, which was also coming from the RGL. It was also coming from the RGL, right? So the RGL was $100, correct? That was in last night's tweets, correct? And we all know that it's sell side below, buy side above $100. So sell side below $100 is our main driving storyline. So if it's sell side below $100 on a one trade basis, did we just see the trade trading $95 today? Yes, we did. So there's a $5,000 winner for those sell side traders and forget type traders. Sell and forget. $5,000, guys, on a sell and forget. Who never made $5,000 today on oil per contract? Well, you're better off as a sell side and forget the trade narrative, because you're not trading even better than a simple systematic entry like the RGL. Think about that for a second. You've not made as much money in a whole day's trading than you would have if you simply sold it for the RGL and then haven't bothered trading for the rest of the day. So you can see that you've got to have done better than $5,000 per contract. Otherwise, you're wasting your time just now, spending a whole day trying to make more money than simply one trade for about 1 minute would have made you. One trade for 1 minute at night, and you'd have made $5,000 per contract today. $5,000. The RGLs are unbeatable if you're willing to put in the work, the effort. When I'm talking about the work and the effort, we're talking about that period where it sets up. Sometimes you've got to get short, take 10 and scratch, and it goes through the other side. You've got to get long, take 10 and scratch, depending upon the risk rewards. And that's all you've got to do until you get into a position that you say, right, that's me finished for the day. You've maybe used up 30 minutes of your day, and you're now short. You pack up your desk, you pack up your trades, and you're waking up the next morning. And you're waking up the next morning, and your trade, which was 100 short, is trading at $95. And all of a sudden you say, excuse me, darling, I'm up $5,000 per contract. I thought you said I was wasting my time being a trader. $5,000. I guess you don't want to have your share of the money I've just made today. And that'll turn your partner around, won't it? That'll turn your partner around to your view of the markets, about whether it's worthwhile. And $5 grand a contract, yeah. 5 contracts in that, $25,000 whilst you slept. Pretty good trade, guys, pretty good trade. So you've got to be able to beat $5,000 for that swing. You've got to be able to beat $5,000 for that swing today in oil. So if you didn't, you're better off just doing the swing. Think about it. It's pretty straightforward, isn't it? Pretty straightforward, considering we tell you that level. You don't need to be told the level. You can draw the level on your chart yourself, can't you? Very, very easy. Just draw the level on yourself. Crazy, 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 crazy. We love a little bit of crazy.